Hello, how do I choose the best brokerage firm for beginners? So, I know there is a lot of brokerage firms out there, but I would just suggest you do your own due diligence. And the way I like to go about it is select a brokerage firm that has been around for a while, because again, your stocks in the stock market is now insured by the government. But when you have money in your account, it is, I will assume the brokerage firm has a bank, because that's what has one, and the money in the account is insured. So do your own due diligence to just make sure the brokerage firm has been around for a while. That's what I like to go with. I'm now attracted by free stocks that that can be an option when you sign up with a company. I just like to search and find stocks that have been a brokerage firm that has been around for a while. Again, I opened my account some years ago, so Charles Schwab is one of the account that I have. So for instance, the way I like to go about it, or if I recall right, is when you go to the account, you can try to read about them to see for how long they have been around, and then you can try to see if they have some physical branches in the state you live in or nearby. You just want to make sure they exist, if that makes sense. So for instance, with Charles Schwab, when I put my state in it, they have it in Des Moines, that's the capital city of Iowa, and then they have one in Davenport as well. So I'll assume Davenport is more toward north. So that tells me that, and one thing I did when I came to this state, I have the account. I think I have the account before I moved to Iowa, or when I moved to Iowa, I opened an account with them. But my husband and I, we went to Des Moines and looked for that branch and went in and even talked to a personnel there as well. But when I was in St. Louis, I believe I used I don't think it was E-Trade. I think I used TD Ameritrade for sure, and I think it might be TD Ameritrade. But they did have, like, one that I used in St. Louis. They have a branch there, and I think I have Charles Schwab account back then as well. So they have a branch. I think TD Ameritrade. In fact, they have a headquarters there in St. Louis, if I recall right. But there is a big building there for that company that I used back then, and I know that I can go in there if I want to. So personally, that's just the way I view it, again, because it could be my generation type. I'm 47 years old, so I like to to know that what I'm doing online has some solid foundation behind it. So another things you can do as well is trying to learn more about them as well. And usually on any website, you should be able to find about, and to just try to read about their beginning and so forth, for how long they have been around. Of course, if you want to they have something compare us here. If you want to just use AI to figure out quickly without doing the research yourself, you can as well. But you can just try to search to see if you'll find about the company and read more about it. So now Charles Schwab, I don't know if he merged or purchased TD Ameritrade, but they are combined now, and Charles Schwab has Think or Swim platform, which was, I believe, it belonged to TD Ameritrade. So when I have both accounts, I tend to use ChargeSwap more because it was easy for me to navigate, while TD Ameritrade account was very busy. As soon as I log in, I'll have a lot of things about a lot of stocks flashing at me, making it hard for me to actually navigate to my account. So, and I just found myself easily using ChargeSwap even back then. But, and now thinking about it, I know that TD Ameritrade was more toward trading, while ChargeSwap was more toward investing. So now that they incorporated the Ameritrade features into their, with their company, and having Think or Swim platform, you can use that to analyze stocks, and that's what I'm using to analyze stocks for my swing trading. And my husband has a Roth IRA, I think a Roth IRA and a brokerage, a Roth IRA with TD Ameritrade. It got moved to ChargeSwap when that merger happened a few years ago. But I have TD Ameritrade. T. Rowe Price is one as well, but T. Rowe Price, I have a Roth IRA with them. I don't know how they are now. Let's go to Google. But back then, they are more toward mutual fund. I don't know if they allow you to trade stocks now, but back then, if you trade stocks with them, it'll be more expensive. They'll do it for you. But that is a very good company in my opinion as well. So we can see account type, and I don't know if right now they allow you to to trade stocks with them, but I have, again, mutual fund there with them. And with them back then, $1,000 was the minimum required, because I was trying to transfer my previous employer 401k to them. When I left there, instead of spending it, I directly transferred it to a place, and then I transferred it to T. Rowe Price. I opened it after I moved here to Iowa, and then later I have my Roth IRA with them as well. So that's pretty much what I know about them. They are more toward mutual fund, but again, they could do trading. I'm not entirely sure. My opinion of them back then was some years ago is more, they will do it for you. They'll buy those stocks for you. It'll be more pricey, but you can choose your own mutual fund. But with ChargeSwap, you can trade, you can invest, you can buy mutual fund. I have mutual fund with ChargeSwap. I have individual stocks with ChargeSwap. I didn't purchase ETF with ChargeSwap as well, but I sold those and use the money when we are buying this house. We use the money, toward the down payment, so that we can have enough money for the down payment and all the things we'll purchase to paint the house, clean the house before we move in. So that is brokerage firm. So if you are thinking about what kind of brokerage account you should open, again, we can go to open an account here, and they have different type of account. So as a beginner, if you have a job, I will advise you open a Roth IRA if you qualify for it. And I think if you are married, you are filing a joint tax return, there is over $200,000 income limit, like up to, I don't know the exact amount because it can vary year to year as well, but that if you are household income wise up to that amount, you should be able to qualify for a Roth IRA. Again, how much you contribute to those accounts when you have an account with your employer. There is some nuances to it, so it's good you read those. But they have those, but I just prefer to have Roth IRA, because with Roth IRA, when you are putting money in it, I know that they have 5,000, 6,000. Again, that's an amount that varies year to year, but I like to just have in my mind 5,000. When you are now CC, I think when you are CC, or there is another year threshold as well, that there is another $1,000 extra that you can that increase that minimum threshold. That is the amount you can put in your Roth IRA in a year. So like after tax money, your paycheck, from your paycheck that you can put in the account, I'm just going to say minimum, not minimum, but up to 5,000 in average a year per person, because the Roth IRA is for you, it's not a combined things. So that you can put in the account a year, and when you put the money there, you can swing trade with it, you can invest it. But when you follow those rules well, you have the account for more than 5 years. If you want to take money out of it and you take just your capital out, you are not going to pay a fee on it, but you are going to file an additional tax form to prove that the money you took out is a part of your capital. It's not the interest, the profits that you generated through your investment and trading. And then they have, I believe, 59 years old that you'll be able to take money out of that account without like taking the portion of the profit out without being penalized or so. But again, do your own due diligence on that. Even though I file taxes, I just don't like to memorize those information. So it's there, read about it if you're interested in it. But pretty much there is an age threshold as well that you should not take money out of your account before then. So pretty much the way the Roth IRA works is your retirement account. You are putting money there, after tax money there, and you are trading, investing it. The profit remain there. Is when you retire, you reach your retirement age, you can take money out of that account tax free. And when you are filing your tax return, to my recollection, that amount you are taking out of that account is now going to be featured on your tax return. It's not a part of your taxable income. So it is tax free. It's not going to be a part of, your, if I'm recalling right, when you're filing your 1040, you're not going to mention that amount on it. How much you are going to take out of the account, there is no minimum or maximum required. So traditional IRA is different. So this one, when there is some money you need to take out after a specific age, there is a minimum you are required to take out, and it's going to be added to your taxable income. You are going to pay tax on it. So, but again, is a contribution you make before tax. So when you are making those contributions, to my recollection, you will be filing a specific tax form. So when you are filing your tax return, so that you can convert it into before tax income, so that it can come out of your taxable income type of things. But again, I don't have traditional IRA, so I'm not going to talk much about it. So Roth IRA is great. I have it. I just don't contribute a lot to it because it has those requirements you have to meet to take money out of it. So I like individual brokerage accounts. Again, if you are married, you can have a joint brokerage account so that you can do things together with your spouse as well. But it's good to have an individual brokerage account for yourself, and your spouse can have his or hers as well. So in my example, I have all three. When I opened with T. Rowe Price, I did this rollover, and later I move it to a Roth IRA there, and I pay tax on it so that I can just not have any of those. So I have all three, and they are all great. And when we were trading, I was trading more in Roth IRA because, again, buying stocks often and selling often, doing it in a Roth IRA, you are not going to have those trade to report on your 1040, yeah, when you are filing your taxes. Something I like to say about Roth IRA though, try not to invest in L.L.C in them, because when you do, you are going to get Schedule K1 from those companies, and then you will send it to your brokerage firm and they will file a form for you. I believe it's 990T. 990T. I'm not entirely sure. They will file it for you. I didn't have a good experience with one of those companies when I owe around $2,000 tax on an investment in an L.L.C that I don't even recall earning. I might probably earn a dividend from them, but that's pretty much it. And I didn't own that stocks for many years either. Therefore, I didn't make $2,000 in dividend. And when they went bankrupt, I lost my initial investment in that stock. In addition to, and I think that dividend that I was earning, I'm sure I must have been reinvesting it as well in that stock. So pretty much I lost that money in that stocks. But then I end up paying $2,000 because when they filed bankrupt, I don't know how they did it, but they Schedule K1 that I received, and that the brokerage firm filed their tax return, whatever the tax return is, on my behalf inside for that, Roth IRA. I end up owing about $2,000 tax liability there that I had to sell another stocks. I think I have four back then. I sold it, the capital and the profit, to pay that, to make that cash available in the account for the brokerage firm to pay that. And I learned a lesson from it, that I'm not going to be investing in L.L.C, whether it is in my Roth IRA or my individual brokerage account. So when I'm selecting stocks for swing trading, L.L.C are out. Partnership, LLP, they are out. So, and that is the reason why I take them out, those type of companies, out of stocks that I would swing trade, so, or invest in moving forward. But anyway, that is just that one. But yeah, and then so yes, trade often, I tend to do that there, and invest long term, I tend to do that in individual brokerage account or in both. So, but that was just my opinion, because I filed our own tax return. I didn't really want to have to do those, going through those 1099 forms and then record those trades. So the past few years though, I decided to invest and swing trade in our brokerage account. And the reason why I decided to do that, so that the money is available if we want to touch it, to pull it out, to do some other type of investment, we can, or even to spend it, we can. So therefore, I'm doing more of my trades in our brokerage account, and is taxable. Brokerage account, individual brokerage account, they are taxable. So therefore, we calculate estimated tax so that we can pay tax on those incomes. So that is something you have to take into consideration. But what I like about it is you are not going to tell, you're not going to trying to see if you meet a requirement to take money out, a maximum you need to take out, minimum you need to take out, age threshold, how much you need to put it in, and things like that. There is no such things. As soon as you are paying your taxes, that's all that matters. So that is the things. If you are trying to do things that you are not going to pay tax on in some way in the US, money you do not want to pay tax on it is money you cannot spend. As soon as you are spending it, you'll be paying tax on it. So making it trading in an account, I can spend that money, whether I'm putting that money there for another investment like a rental property or things like that, or taking money out of there, taking a portion of the profit to buy a car, for instance, you are going to pay tax on it, and that is a personal choice. I'm okay with it. So by doing so, it's important you track your earning so that you can estimate, your tax rates. With your tax rates, I don't know if I would say a marginal tax rate, but pretty much, or your nominal tax rate, but with your tax rate without any adjustment and all those, based on your income, the tax rate bracket your income fall within. That's pretty much what I use. So and just estimate your tax on return and pay on a quarterly basis so that you meet that requirement. So just pay and then track it well, because when you are filing your 1040, you are going to be putting those amounts. For our states, I don't know if that's the software I'm using or that's the state things, but when you pay those taxes during the year, you'll put them as well. So track how much you are paying, when you are paying it as well, just in case those information came up, you have the information to work with. So that is the downside of having a taxable brokerage account. But the good side of it is that money, you can touch it. So, and that is a personal trust. That way, you are not trapped. Some people like to call it middle class trap. You are not having money in a vehicle that you cannot touch. Even though you have the money, you feel like you don't, because you limit yourself just to save on taxes. So tax, the way I view it, tax is a portion of your money. It's not the 100% your money, it's a portion of it. And living in a country that I know that you cannot avoid it, I don't mind paying it. So therefore, I focus more building our brokerage account the past 3 years or so that we have sustainable money there. That again, we are trying to create a stream of income that we can have beside our job, so that when there is a temporary job loss, we know that we have other stream of income we can tap into. Some like to have 1 year of emergency fund. That's great. I don't. I prefer to have to invest in an area that if I want to touch my money, I can touch it without asking somebody permission first. I'm not talking about my husband, of course, because it's in a joint account. So, but again, it's good to have your own brokerage account so that you have that freedom to put some money there and trade there if you want. So I don't do much in my individual brokerage account, but some years ago that I invest in some stocks, those stocks are still there. Going into 2026 though, I like to do more in my Roth IRA, just putting a little bit of my own allowances in it, and so that I can continue swing trading, because it's a small account. I can continue trading. Pretty much it's like a beginner. It's a small account there. It's like around 3,000 or so or less. Then I can just continue building it little by little. And while the majority of my husband and I's paycheck is going more into our joint brokerage account where we are doing most of our swing trading. So if you are asking about brokerage firm, do your own due diligence. Find a good brokerage firm that actually exists, that that you can drive to, ask questions. If that if even if they don't live in your state, at least they live somewhere. Does that make sense? So that is a good thing, but that's just my personal opinion. Google them around to see for how long they have been around. That's a good thing as well, because again, you do not want to invest in a company, your money with a company that will just prove volatile at some point. You want a good structure. You are building your future. Make sure the foundation is solid. So, and that's that. And then when it comes to brokerage account, then if you are married, all three is worth having. If you are married, you have job, your spouse has job, all three are good having. And it's good if you have your rough IRA, your spouse has one. If everybody is qualified for it, and have a joint brokerage account where you all can work, invest in and work on. And if you all take some money for yourself, like allowances also, you can put some in your Roth IRA or in your brokerage account. Just know that individual brokerage account and joint brokerage account, they are taxable when the Roth IRA is not. If you follow the rules there, and there is a maximum you can invest in within a year. That is one thing. The way we are doing it though, we could try to max our Roth IRA first and then invest in the joint brokerage account. That's one way. I just find that when you are doing multiple things at once, which I'm very good at doing, it takes a while to build momentum. It takes a while to actually have a sustainable growth on each one of the areas. Does that make sense? So I'm very familiar with those because that's the way I operate. I'm more generalist, that person, and I like to balance things. But I just noticed that if I want to grow this account to have sustainable money there, I have to focus all our energy on it, and that's what I did the past 3 years. So, and that's that we have 6-figure assets value there, and we are going to continue because again, I'm married. So when we put our paycheck in our checking account, and then we know how much we need to leave in the checking account for our regular expenses, how much we need to put in our saving account for our irregular expenses, then we know that the rest we'll need to move it to our brokerage account for investing or trading. And then my personal allowances, if I want to save some, I can move it there or I can move it here, but probably it's going to be here because I know that with my $100 monthly allowances, which I don't save much of, I'm not going to exceed that 5,000 maximum contribution in a year here. So those are, when it comes to brokerage firm and brokerage accounts or different type of accounts you can open, that's that. So, and if you have kids, opening an account for them is things as well, but you can open yours first and later you can do more research on that. But yeah, let's see all others. And pretty much, and then you can just read about it. But there is account for kids here. I like to, it's a brokerage account. I'm not talking, it's a little bit this one. Let's see. 529, you can open that with your state, but yeah, it'll be a custodial account. So, and then put some money in it for them as well. When they become when they become, there is an age limit for each state, but when they reach that age limit, the account will be transferred to them. It won't be with linked to yours at that point. I think that's the way. But yeah, and that's one way you can start teaching your kid how to trade. Personally, I just prefer this over 529. Again, it does not have the same tax benefits, but I just feel like they can use that money to learn to swing trade, which I'm teaching them now, instead of me doing it for them. I'm still doing it for one of them, but the other two, I'm teaching them to do it themselves, and then they can use it to start their own business when they grow up, or toward a down payment, or things like that, or just continue growing it. So those are options. But while you are learning, you are doing it for yourself. You have kids, you might want to start teaching them as well, exposing them to that knowledge, so that they don't have to reach your age before they find out about that information. So now that we spend a lot of time going through those, let's analyze the stock of the day. So it's going to be TM. TM made it here. Okay, so TM is an international company, though. I traded a few years ago, but back then I don't think it was called TM. And you do pay foreign tax on it, if I recall right. So TM, we are going to use maximum daily chart here, but I'm not seeing any long trace. So therefore, we are going to go to maximum monthly chart, and then we are going to trace our support line, because we are using multi-year upturn and swing trading strategy. Pretty much we want to see our higher lows at the valley and higher highs at the peak of the mountain. So I'm going to say that this is following this trend line here. That is the valley line. We have the date on the x-axis from the past to the present, and then we have the price on the y-axis from $0 up. So we have, and all those dotted lines are years, and we have multiple lines here. So, and I'm seeing higher lows. The stock is pulling back, leaning on it every time that it's pulling back down without going too down past it, and for multiple years now. So it didn't really come back down to here, it remained here. So I'm going to assume this is the valley line it's been following. This is the line that I'm comfortable buying it at. So I'm going to color code this one to teal color. But again, let's check our mountain here. So this one, it took some years though before it exceeded, but then as it start climbing, this one is reaching higher here within 2 years, but then it took some years again before it exceeded, and this is during the pandemic here. But then when it pulled back, it exceeded again 2024. Okay, and it pulled back. This time it didn't really touch base with it and start going up. So we are just going to let it go up. So we are going to go back to maximum daily chart, and just it didn't, for some reason it didn't really touch base with it the way it did it here, and it start going up. But we are just going to let it be. It's far from where we like to buy it. It could well be on its way up, and when it reaches and pull back down, then we can buy some share. But it left here already. Does not mean you cannot buy it. I just don't know if it's going to come back down here or not. But it seems to be following this trend line here, that if it fall back to, you might want to buy some share, which is a little bit far from here, but still further away from here as well. But at this point, we are just going to let it be. We are okay with it to just let it be. We didn't catch it around here. Even if we caught it here, I'm not sure I would buy, since I like to really for the past few years it actually touched base with it, but again, this is more like an area, not just a single line, but for the past few years it actually touched base with it, so I will assume it's going to touch it, and it didn't. So I'm just going to keep observing it. If it continue going up until it reach a new high, that's fine. If we pull back down to it, then we can buy some. Well, today is December 20th, 2025. It's a Saturday, and yesterday the market closed on green. The price at the end of the day was higher than the price in the morning when the markets opened. So the price went up yesterday. But as we are looking at the holdings, the direction is going north, is going up. So, and but yeah, that is, so it's not a buy for us. It already left this area, it has not come down to it yet. Whatever it is, it's doing, but it seems to me that it is well could be on its way up. That maybe it's not going to touch it before going up, but either way, it's not a buy for us. So this is the analysis for TM. So thank you so much for watching our videos. We thank you very much for your time. Thank you for all your comments, and we thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. We organize small group online workshop. If you are on a weekly basis, if you like some feedback on how you are analyzing stocks, you want some confirmation to make sure you are analyzing it well, just the way we analyze it, that's just the way you do it. But if you want some feedback, you wanted to ask questions and practice analyzing stocks to get feedback, to to ensure that yes, that's the way you should be doing it, will you please check our online store liberdownload.com for that online workshop and sign up if you are interested. For more videos in this series, will you please check the playlist in the description of this video. We have multiple playlists related to swing trading, but the last one at the bottom is this video series that we are working on and will be working on toward 2026 as well. Thank you so much for your time.